Bharti Hexacom surges more than 9% following a bullish note from Jefferies. The brokerage upgrades the stock to a buy, raises the target price to 1600, citing the company would be the best play on tariff hikes.
Samvardhana Motherson comes under pressure yet again after brokerage firms Investec and Citi issue bearish calls. Citi issues a sell call citing weak demand. Investec downgrades the stock to a hold on weakness in the European markets.
Gold financiers Muthoot Finance and Manappuram shine higher by almost 4-5% each as gold prices hit a record high of nearly $2,600 an ounce.
Patanjali Foods has slipped nearly 4% after 3.3% equity worth over 2,200 crore rupees changed hands at nearly 1,900 rupees a share. Sources say that promoters Patanjali Ayurved and Patanjali Parivahan are the likely sellers.
And we have Purvankara, which has climbed over 4% after the company is bagged redevelopment rights for a 2,000 square meter plot at Breach Candy in Mumbai. Hello and welcome. You're watching us here on Chartbusters. I'm Manglam Malu. With me, Hormas Fatakia. The light above my head is firmly in the green. That's the mid-cap index. But, you know, slight bit of profit taking, a bit of consolidation. Shallow dips is what we're seeing in all the frontline indices after what was a stellar, startling and remarkable afternoon yesterday. Hi, Hormas.
Hi, Manglam. And it seems that the street is still trying to come to terms with what happened in the second half of the day, hoping for an encore in the second half today as well and looking to end the week on a high. But yes, dips have been shallow and that has been the trend almost all through the year. Nifty still above that 25,350 mark. The metals index doing well, realty doing well. The broader markets, of course, are doing very well in today's session, as is Bharti Hexacom. And that is the stock that is the one in focus, almost 10% higher after Jefferies upgraded the stock just 3 months after they downgraded it. So now they have upgraded the stock again, raised the price target to 1,600. So the stock of the morning undoubtedly is Bharti Hexacom, almost 10% higher at 1,400. But let's get you a view on what the charts are looking like currently for the indices. Apurva Sheth of Samco Securities is joining in for a technical check on the markets. Apurva, good morning. Thank you so much for joining in. The kind of move that we had yesterday, does that now open further upsides on the Nifty, say towards 26,000 by the end of the series? Apurva, I guess you're on mute, Apurva.
You want to say that again, Apurva? I think he's still on mute. What we'll do is we'll just try to repatch that conversation with Apurva once we fix that audio. Meanwhile, a bunch of stocks doing extremely well. Most of them belong to the jewelry pack. Yesterday, Kalyan Jewellers was up 3% and now it's up around 6%. So Kalyan Jewellers is the intraday chart that comes up for you. We're also seeing some traction on Senco and TBZ along with the other jewelry stocks. So all these stocks are buzzing around. The intraday charts of all of them come up for you on the screen. Kalyan up 6% now. Apurva's back with us. Apurva, your call on the indices and individual stocks?
Hi, thank you for inviting me on the show. So the kind of move that we saw yesterday took everyone by surprise. And so far, I would like to wait and watch whether the Nifty is able to close above the previous all-time high, which was 25,333. So it would be good if we can close above that. And also along with the Nifty, so mid-cap index has hit a new high, but micro-cap and small-cap index are yet to cross that new all-time high. So I would prefer to wait and watch and whether all the major four indices are also participating, which would be a sign of that okay, we are again in a good uptrend. On the stocks front, I would like to recommend Torrent Power, which has given very good numbers in the last quarterly season. So the sales grew by 23% and PAT grew by 88%. Both quarterly sales and PAT were at lifetime highs, and the stock is also now seems to be breaking out after consolidation. So 1650 was a strong support for the stock, and that would be my stop loss, and the target in the short term would be 1950. Another stock would be Tata Steel. So it's reversing after a downtrend and it's breaking out of a downward sloping channel. It has formed a good base around 148, 145 zone. So my stop loss would be 148 and a target for near term would be 170.
Apurva, thanks a lot for joining in, sharing with us your views on the index as well as specific stocks. Shifting focus to our special segment where we get you a few ideas for profit from Money Control Pro. Madhuchanda De of moneycontrol.com joins us now to talk about a stock that she is tracking very closely.
We are talking about Zensar Technologies that had a performance turnaround following the change of guard with Mr. Manish Tandon taking over from 2023. While the margin of the company had early gains, it is only in recent quarters that we have seen revenue traction supported by all its key verticals. The performance volatility in Zensar has reversed, which is a good news. Nevertheless, the company has some short-term challenges to grapple with. The good news, however, is that the share of service lines in the total revenue is on the rise, which shows that the strategy of cross-selling is working well. The share of the top accounts in the revenue is also increasing. Zensar is adding muscle to its promising verticals like healthcare, case in point being the recent acquisition of Ridgeview. The management of Zensar is reasonably confident of outperforming the industry growth by FY26 and is also contemplating issuing profit and revenue guidance which would instill confidence of the investor community. The current consolidation phase is a good opportunity to gradually add the stock for the long term.
All right, with that, we'll take a short break. On the other side, we have the management of Western Carriers India to discuss their IPO launch. Primary market action all underway. Stay tuned for that. Kanishka Sethia and Rajendra Sethia, who are the CMD and whole-time director and CEO of the company, join in.
Back with us here on Chartbusters, onto some primary market action which has been buzzing over the last few days. Logistics company Western Carriers opens its 492 crore rupee issue for subscription today. The subscription will close to the public on the 18th of this month. Now, to discuss the company's post-IPO strategies and the growth plans ahead, we are being joined by the whole-time director and CEO Kanishka Sethia, along with the chairman and managing director Rajendra Sethia of the company. Gentlemen, good morning. Thank you so much for joining in. I'd want to start off by asking you about the growth trajectory of the company. Your 3-year CAGR for revenue has been around about 4.6%, lagging peers. What could you attribute that to, and what is the kind of growth that you are penciling in for, say, the next couple of years?
Thank you so much for this opportunity to be with you. A very good morning to you. So we've been growing steadily, and we hope to be growing steadily going forward as well. The industry's had some headwinds, especially from the Middle East due to the export volumes due to the Middle East crisis. But once the things resolve, the volume should pick up. And we've been one of the bellwethers in the multimodal integrated supply chain solution space. That's a space which is growing as the economy is growing. I think as an industry as a whole, we have a huge amount of headwind to go forward in the future.
Right, you said that the industry has been facing some headwinds, and as a result of which the growth over the last few years has been subdued as well. But in that as well, Kanishka, if I may say, you have been lagging all your other listed peers too. So 4.65% revenue CAGR is a lot lower than even what the GDP grew over the last 3 years on a compounded basis. So two-part question here. What is the growth likely to increase to, if you could break that up into realization and volume? And the second part, in your DRHP itself, you've written that you are looking to increase your operating margins. So how much improvement can we see in your operating margins from the current 8.5% that they are at?
Good question, sir. Actually, our EBITDA numbers are just shy of 9%. We've been improving our profit margins incrementally over several years. That's a factor of several things, including, better efficiencies, better supply chain management, greater volumes, which have been helping us consolidate our play. We are hopeful that if things remain good for the industry as a whole, the profitability should increase. And we are seeing, positive signs of growth in all clusters that we work in, sir, including metals, where we have a dominant position, FMCG, pharma, industrial chemicals. So we hope for the industry as a whole, things are going to improve. One of the factors which is really helping, I would say, the growth of supply chain and 4PL is the fact that the amount of investments that the government has done in the recent past in several initiatives, including the multimodal logistics parks, direct delivery from ports, as well as the dedicated freight corridors, the eastern as well as the western. These are, basically factors which are great enablers for the industry. And we are hopeful that being in a dominant position in this niche, we should be able to partake of the growth coming in the future.
Now let me bring in Mr. Rajendra Sethia into the conversation as well. Mr. Sethia, I wanted to ask you actually a two-part question. Firstly, why is your cash flow from operations lagging the EBITDA growth? Also, the fact that there have been a huge increase in receivables ahead of the IPO year. That's part one of my question. Why is that so? And part two of my question being your working capital days in FY24 has been 96 compared to around 58 in FY22. And what is your outlook on the working capital days going forward as well?
Thank you very much for giving me the opportunity to be with you on your channel. And so far as all these financial numbers are concerned, I will ask my CEO to give you a proper reply in this with the numbers.
All right, Kanishka, would you like to answer that?
Happy to take that question, sir. So the receivables has increased slightly over the last year. This is primarily because of the number of new projects that we've started. We are on the cusp of initiating a few new projects in the domestic cluster, which have initiated. That's taken the working capital days has increased. The working capital for the industry as a whole, sir, increased post-corona because the principals at that time faced strong headwinds. It has started to improve now from this year onwards, and we hope that in the next 2 or 3 quarters, you will be able to see an improvement in the receivable cycle. So what was the second part of your question, if you could please repeat?
The second part of the question was, why is your cash flow from operations lagging the EBITDA growth? What would you attribute that to, and do you see that improving going forward as well?
So the cash flow, sir, whatever we generate, most of it is going back into the business, sir. And we are hopeful that, given the strong surge in economic activities which is happening, we should be in a position to keep on reinvesting whatever cash flows we generate, sir.
All right. While you are speaking about strong growth prospects of the industry and margin improvement, etc., you're shying away from giving numbers, and we get that because ahead of the IPO, you don't want to keep the regulators or the bankers or everyone on the wrong side by projecting forward-looking numbers. But what really stands out as red flags, and I'd like either Mr. Rajendra Sethia or Kanishka, you to answer, is the kind of related party transactions that there are and the money that is being paid both to Rajendra and Kanishka of the company itself. Let's point some of them out. Rent paid to promoter Rajendra Sethia in FY22 was just under 1 crore. FY23 moved to 1.4 crore, and FY24 that number moved to 1.6 crores. Remuneration paid to promoter Rajendra Sethia was 1.2 crore in FY24, which doubled from what it was in FY22. Add to that, there's 1.5% of profit coming in as commission for both Rajendra Sethia and Kanishka Sethia. So if you add both, the rents paid to promoters along with remuneration paid to promoters and the commission paid, it's nearly 10% of your FY24 profits. That is something that leaves, a bad taste in the mouth of investors. What are you planning to do about that? Mr. Sethia, you can go, Rajendra, you can go ahead with it.
Basically, this is where we stand as of now, but as the profits will keep on increasing based on whatever we are doing and whatever our plans are, our withdrawals will remain the same, and you will see that there will be a big fall in profit vis-a-vis whatever we are withdrawing now.
Why are you drawing so much money from the company right now? And if profit increases, so does your commission, because commission is as a percentage of net profit, 1.5%, both for you and Kanishka. So together 3% goes out straight as commission.
So, sir, I would like to come in here. Rentals is basically, we were a proprietorship company when we were founded in 1972. We converted into a limited company in the year 2011, 2012. So whatever were the rental incomes are basically of properties which were belonging to the promoter, hence the rent is being paid. The rents are all as per market. If you look at the total rents that we are paying, being an asset-light company, is extremely low given the size and scale of our businesses, sir. The salary which is being drawn is also very commensurate to what is being paid to the management. It's actually maybe on the lower side compared to the others, listed peers. And we are very focused on growing the business. We are very focused on keeping our business very asset light, keeping our focus on creating supply chain solutions for our customers where we are able to add value to their supply chain, sir. Our main mantra remains that we have to focus on creating value for our partners by doing the entire complex supply chain solution pie for it. And we are 100% focused in this. We do not want to lose our focus on doing anything else. All disclosures have been made completely in our offer book. Everything is very transparent, sir.
Right, which is what leads me to the final question from my end before Hormas takes over on the margin and growth outlook here as well. The promoters, both of you all were directors of Western Conglomerate whose shares were suspended from being traded on Calcutta Stock Exchange when you guys were directors. What exactly happened out there?
So it was a documentary lapse from our side. We've already taken care of it. The entire disclosure with regards to Western Conglomerate is also available in our offer documents, and all disclosures with regards to it have been made, sir.
All right, Mr. Sethia, thank you so much for joining in for both of them, and wish you good luck for the IPOs going forward as well. We look forward to chatting more with you guys on the listing day. That was the management there of Western Carriers, the IPO opening for subscription today, the price band of 163 to 172 rupees a share. Time for a short break. Up next, we put the spotlight on IPOs and the IPO rush that has taken place so far this year. Stay tuned. Back on the other side.
Welcome back. You're watching us here on Chartbusters. If you're just looking at the Nifty, you're perhaps missing the point of the big moves that are taking place in the broader markets and some of the frontline names as well. Wipro, for instance, has now surged 4%. Currently the top Nifty gainer, and giving it company on the way up is Tata Steel as well. So both IT and metals doing extremely well. And we have a bunch of these broader market stocks doing well. That's reflected in the kind of move that we're seeing in the mid-cap index, small-cap index, and the market breadth as well. But moments ago, we spoke to the management of an IPO that's launched today. And it's not the only time we've spoken. For the last many days, we've been speaking to a lot of these IPO companies because primary market activity, that has been a buzz. In 2024 itself, the number of companies that have made their debut are already at par with the number of IPOs seen in all of 2023. But have these IPOs done well or not? What lies ahead for all of them? My colleague Hormas has moved across to the wall to tell us all that's taking place. Hormas.
Well, the market may have had a topsy-turvy ride through the year en route to a record high, but for the IPO market, it's been as smooth as a highway because 57 IPOs have already closed for subscription so far this year. The number in all of 2023 was also 57. So definitely we'll have more IPOs this year, but the differentiating factor as of today is the fact that the IPOs of 2024 have already raised more money than all of 2023 put together. Now, according to this data from Prime Database, IPOs so far have already raised a sum of 62,600 crores in 2024, well above the 49,400 crore raised by companies in the primary markets last year. Mind you, this list also includes IPOs that were open for subscription but have not yet listed. Now, September traditionally has been a good month for IPOs, and the 7 issues so far this month have already raked in well over 9,000 crore rupees. But August so far has been the best month in terms of funds raised because over 17,000 crore rupees were raised by 10 IPOs that month. Now, how have these IPOs fared? Now, 5 of these IPOs have returned 100% and more from their IPO price already. Now, 30 of them have seen gains of anywhere between 25% to 100%. Now, only 7 IPOs are currently trading below their IPO price. Now, shows you the kind of market that we've been in. Now, unlike 2021 and 2022, there have been no giant-sized IPOs so far. While 2021 we had Paytm, LIC surpassed that in 2022. Now, Bajaj Housing Finance, which has been the talk of the town for the bids that it received, is the largest IPO of the year so far, followed by big names like Ola Electric, Bharti Hexacom, and of course Brainbees Solutions as well, the recent listing. Now, 45 IPOs this year have delivered positive returns to shareholders. Among them, Jyoti CNC is the top performer, and that is because with the stock more than tripling from its IPO price. Now, recent listings like Unicommerce and Premier Energies also feature in this list, considering the strong moves they have seen just a few days after listing. Now, among the few IPOs that have delivered negative returns include Capital Small Finance Bank, Popular Vehicles, among others. However, none of these IPOs have seen a very substantial fall, as in halving from IPO price or things like that. Now we still have 3.5 more months left. At this pace, it won't be a surprise if by the end of the year we do a story saying that IPOs have raised 1 lakh crore so far in 2024.
Absolutely, the kind of paper that is slated for the remainder of this year, it could very well be that as well. But, you know, be that as it may, while we were talking about the markets, there was an important political development that took place in the capital. At the bottom of your screen, there was news that the Supreme Court has gone ahead and, you know, granted bail to Arvind Kejriwal. In fact, the Supreme Court has gone ahead and quashed the Delhi High Court's earlier refusal to grant bail to Arvind Kejriwal, and this is with regards to the excise case. So just keep an eye out on developments out there. We'll probably at some point try and connect with Ashmit, our correspondent, who's been tracking this story very closely as well. In the markets itself, there's been a big up move that we're seeing in the broader markets, and that's the story of the day. We've seen a smashing recovery from the lows on Granules India. That stock was down 16% yesterday, opened with a 5% cut, and from the lows, it's actually seen a recovery of 6%. Remember, the stock is in F&O ban, so no fresh positions can be taken to be carried over for the next day. That could be, you know, a reason why there has been a bit of a recovery as well. And there was a note that came in from Motilal Oswal this morning as well, saying that the company may perhaps get out of the woods when it comes to the US FDA issues that they're facing for their plant at Gagillapur as well. Kalyan Jewellers continues to rally. The jewelry space is abuzz, sparkling, up 7% higher on Kalyan Jewellers. TBZ up 7% as well. And all things luxury selling too. You can see that in the share price of Ethos, which is up around 6%. With that, we're out of time on this edition of Chartbusters. You stay tuned. Trading Hour comes up next.